Property and Casualty Exam California. Welcome to the quiz. What is the purpose of the anti-concurrent causation clause found in many property policies? Is it A, it covers losses caused by two perils at the same time? Or B, it excludes losses caused concurrently by a covered and non-covered peril? C, it doubles the coverage when two perils occur? Or D, it applies only to flood losses? The answer is B. Anti-concurrent causation, ACC, clauses state that if a loss is caused by a combination of a covered peril and an excluded peril at the same time, the entire loss is excluded if the excluded peril contributes, preventing coverage even if covered peril also contributes. This protects insurers from paying for excluded causes like flood or earth movement concurrent with wind. It does not cover concurrent, double, or limit to flood only. Next question. Which of the following is a form of self-insurance? Is it A, purchasing a high-deductible policy? Or B, setting aside funds to pay expected losses? C, buying an umbrella policy? Or D, hiring a risk manager? The answer is B. Self-insurance means the entity bears its own risk by setting aside funds or reserves to pay expected losses instead of transferring to insurer. High deductible is partial transfer. Umbrella transfers excess. Risk manager administers, not self-insure. Next question. A commercial trucking company wants coverage for goods being transported across state lines. Which type of policy is specifically designed for this exposure? Is it A, inland marine? Or B, ocean marine? C, commercial general liability? Or D, boiler and machinery? The answer is A. Inland marine insurance is specifically created to cover property that moves over land such as cargo, goods, equipment during transit by truck, rail, or other means across states or regions, including protection against theft, collision, or other transit risks for transported items. This fits trucking cargo perfectly. Ocean marine is for ships and international sea transport, not land-based trucking. Commercial general liability covers bodily injury or property damage the business causes to others, but does not insure the business's own goods or cargo in transit. Boiler and machinery covers explosion or breakdown of equipment like boilers, not cargo transport. Inland marine fills the gap where standard property policies stop for movable items. Next question. What is the legal doctrine of residential ipsa loquitur, and how does it affect liability claims? Is it A, it shifts the burden of proof to the defendant when the accident would not normally occur without negligence? Or B, it requires the plaintiff to prove intent? C, it eliminates punitive damages? Or D, it caps medical damages? The answer is A. Residential ipsa loquitur means the thing speaks for itself and applies when an accident happens in circumstances where it ordinarily would not occur unless someone was negligent, the instrumentality was under the defendant's exclusive control, and the plaintiff did not contribute, so the court allows the jury to infer negligence without direct proof, shifting the burden to the defendant to explain why they were not negligent. This helps plaintiffs in cases like falling objects or surgical errors. Proving intent is for intentional torts, not relevant here. Punitive damages and medical caps are separate issues unrelated to this doctrine. Next question. What is the purpose of the liberalization clause found in many property and casualty policies? Is it A, it allows the insurer to reduce coverage without notice? Or B, it automatically applies broader coverage revisions to existing policies without additional premium? C, it requires the insured to accept all policy changes? Or D, it allows the state to change policy terms? The answer is B. The liberalization clause states that if the insurer revises the policy form to broaden coverage during the policy term without charging extra premium, the improved broader coverage automatically applies to existing policies to keep them current with better terms. This benefits insureds. Insurers cannot reduce coverage midterm without notice/endorsement. Insureds are not forced to accept changes, and states set filing rules, but do not directly change terms. Next question. A contractor has a CGL policy on a claims-made form. They cancel the policy and do not purchase tail coverage. A claim is filed 6 months later for an incident that occurred while the policy was in force. Is the claim covered? Is it A, yes, because the incident occurred during the policy period? Or B, no, because the claim was not reported during the policy period? C, yes, if the contractor notifies the insurer within 1 year? Or D, no, because tail coverage was not purchased? The answer is B. Claims-made CGL covers only claims made and reported during the policy period, or extended reporting if tail purchased. So without tail, a claim filed after cancellation is not covered even if incident was during policy. Occurrence would cover based on incident date. No automatic 1 year. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye.